I don't understand the point of putting all this money away that I can't access until I'm 65 when I'm probably gonna die at 75. Incredibly morbid. So this is why the Roth IRA was an incredibly appealing account to me. So let's break this down. The Roth IRA is an individual retirement account. Now the Roth IRA is tax advantaged. Now what this means is that after you get paid from your employer, your employer takes your taxes out before you get that money. So that money you get from your paycheck that you take home, and you can put that into your Roth IRA, the account. From that account, you can invest into other investments like stocks and bonds and real estate trusts, whatever you want to invest in. So that account protects your money so that when you do put your stocks in or your bonds in or like a real estate trust and that grows, and the profit that comes from it is completely tax-free. Imagine that. When we work, we get taxed on it. If we sell things, we get taxed on it. Business income, with a profit, we get taxed on it. But in a Roth IRA, that is not taxed. So if I put in, let's say $5,000 this year, and I don't even add anything after that, and it turns into $20,000 later, I keep all of that $20,000, which is different from a regular brokerage account. If I were to invest that same stock for $5,000 and it grew to $20,000 in a brokerage account, I would have to pay capital gains tax on that. So instead of taking home $20,000, I can pay all the way up to 20% depending on my tax bracket. It's in contrast to a 401k in which it's locked away until I'm, 65 years old. I can't touch that money. If I do want to touch it, it comes with a huge penalty on top of being taxed at ordinary income, which makes it very unappealing to take money out of, which is probably the point of a retirement account. But the Roth IRA, I have the freedom to withdraw that money. I can't withdraw the profit, but I can withdraw the money that I put in. So let's talk clearly about what the advantages of the Roth IRA are versus the disadvantages of the Roth IRA. All of the profits that I make on my investments inside of my Roth IRA account are completely tax-free, which means I don't owe Uncle Sam or the government after I've made more money on my money. I can withdraw my money at any time without any penalty, unlike other 401ks or the traditional IRA. But be aware that even though I can withdraw my money, I can't just put it all back in. No matter what, you're limited to a contribution of $6,000 per year if you're under 50 years old, and up to $7,000 per year if you're over 50 years old. Another great feature is that you're able to leave your Roth IRA to your children. So let's say if you were to pass on, you could leave it for your kids as a gift and it is still completely tax-free. Not only that, this is a huge pro tip. If you have a kid right now, let's say that they're 15 years or younger, if you were to deposit just $6,000 into a Roth IRA, invest it in a conservative index fund, and expect a rate of return of around 7 to 8%, if you were to put that $6,000 in for your kid by the time they were 15 years old and never added another dollar again, your kid would be able to retire a millionaire as long as they don't take out that money before then. And if you want more information to guarantee your wealth and your next generation's wealth, make sure to subscribe. Now, I've talked about a lot of great things about the Roth IRA, so there has to be some disadvantages, so we're gonna go over that too. Now, the first disadvantage of the Roth IRA is that you can't use it to reduce your tax burden. Now, what does this mean? Now, with a traditional 401k, whatever money I put into my 401k, I don't get taxed on. So let's say I put in the maximum amount or close to a maximum. Let's say I put in $13,000 and my income for this year was $90,000. So that would have brought my income down to $77,000. Not only am I not paying taxes on that $13,000 I put into the investment account, I also owe less money to the IRS overall because now they're taxing me on $77,000 rather than $90,000. So I get dual benefits there with taxes. I don't pay taxes on the money I put into my account, and I'm gonna owe less taxes because I'm being taxed on a smaller amount by the end of the year when I do file my taxes. Another disadvantage is that only those making less than $140,000 a year as an individual or up to $208,000 as a couple are allowed to have a Roth IRA. Otherwise, you're out of luck. Just kidding, there is another way to get around this. For those making a higher income and are not able to enjoy the tax benefits of a Roth IRA, this is the way to get around it. Now, if you do make more than that, there is a way around this called the backdoor Roth IRA. I can't walk you through it completely in this video. I'll just give you the gist of it. You'll have to get an accountant if you're in that tax bracket. But basically what it is that you can put your money into a traditional IRA and then pay taxes on the money in the traditional IRA and then roll that into your Roth IRA. For those making a higher income and are not able to enjoy the tax benefits of a Roth IRA, this is the way to get around it. Now, again, you have to get an accountant because I'm not a fiduciary. I'm just sharing information, so make sure to talk to your accountant before attempting to do anything yourself. The last disadvantage of having a Roth IRA is that it has to be earned income. Now, like I said before, this is money that you have to earn from an employer. Now, what are mistakes that you want to avoid when opening a Roth IRA? The first one is not opening one soon enough. Guys, the name of the game with investing is starting as early as possible. The next mistake is that you didn't contribute to your spouse's Roth IRA. You're not only able to contribute to your own Roth IRA, but you can contribute to your spouse's Roth IRA. So basically, let's say you're the breadwinner in the family, you make $120,000 a year, but your spouse only makes maybe $10,000 or $15,000 a year and they don't have enough left over to contribute to their Roth IRA. That's all right. You can max out your Roth IRA and you can contribute to their Roth IRA on top of that. The next mistake to avoid is pulling out too much of your money. Now, like I said, the great thing about the Roth IRA is that you can take out the money that you've put in, but you can only take out the money that you've put in, which means that, let's say if I've invested $10,000 so far into my Roth IRA, and now it's profited up to $15,000 because I bought some great stocks, some great index funds that grew, I can only withdraw up to $10,000 because that is what I put in. If I withdraw the $15,000, then I'm going to have to pay a penalty on that profit that I'm withdrawing early. So leave your money in as long as possible so that it can grow, so that you can use that money later in life when you're not able to work as much, and just focus on the money you're making now and using as little as possible of that to live off of. The next mistake to avoid is that if you have a Roth IRA, you want to make sure that you have a beneficiary named just in case, unfortunately, you were to pass on. So what this means is that if I have my Roth IRA, I can name my little brother to receive it just in case something ever happened to me and I were to pass on. He would get it directly. Otherwise, if it was just under my name, it would go to my estate. And then depending on, what happens, it could take a long time for him to get that money. He might have issues getting it. You want to make it a clear and simple process. Name your other spouse, name a beneficiary so that you make sure that they can inherit that money just in case anything were to happen. The next mistake to avoid is only using the Roth IRA. Now, again, I said that the Roth IRA is my favorite account, but it is not my only account. There's other great retirement accounts like a 401k, and especially if you have an employer who's matching what you contribute into your 401k, you should definitely at least match up to what they're willing to match on yours. So let's just say that my employer is willing to match up to 5% of whatever, 5% of my income, or let's say maybe $1,000, dollar for dollar up to $1,000, I should be at least putting in that $1,000, or should at least be putting up to that percentage of my income that they're willing to match, because that's basically free money. You're basically able to double whatever money you've made and put that away into retirement because your employer is willing to match that. That's something that companies don't do with a Roth IRA, because Roth IRAs are individual accounts and 401ks are company-driven accounts through your employer. So they have the ability to match your contributions, but with a Roth IRA, there's no one who's going to match your contributions unless someone wants to add some money into my Roth IRA. Otherwise, I don't think that's happening. Now, the last thing I want to leave you guys with is where to invest in a Roth IRA. Now, there's lots of great places like Vanguard, Fidelity, Charles Schwab, M1 Finance. I like Vanguard because the fees are very low, they're very trusted, and they have a very good track record for a lot of their index funds. So I like to invest my money in the index funds because it's low maintenance. I don't have to think too much about it, and I have a reasonable expectation to how much money I should be expecting back over 5, 10, 20 years. However, there are a lot of other great places too, like I said, like Fidelity and Charles Schwab, that are also very well known, very easy to use. And I hear that the customer service at Fidelity is excellent. And if you're someone who wants to call in and talk on the phone and be really walked through and on how to invest, Fidelity is a great place to invest as well, but not to say Vanguard isn't. I haven't had to try that because I like to educate myself and be a little bit more hands-on, but otherwise they're also a great place to invest your money. 90% of the game is just opening the account, putting the money away, and starting to save. Now make sure you do that as soon as possible. If you're an employee, if you earned income, then having a Roth IRA is a great option for you. And if you want to, talk to an accountant, talk to a fiduciary, someone who is licensed to give professional advice on retirement accounts or investing in general, and have them help you to open an account, pick appropriate funds to invest in so that you can make sure that you have wealth for when you get older, so you don't have to worry about working and bills and such, and you could just retire in peace. Now, thank you guys for watching. I really love doing this and being able to give you guys high quality information so that you can change your life and change the lives of the generations that are gonna come after you. So if you wanna see more, subscribe, hit the like button. I appreciate you guys. See you later. Peace.